I would be more optimistic about those characteristics if I didn't think that they'd be offset by a flattening yield curve, which might disincentivize banks to loan, and we'll have to keep an eye on that. If I didn't see, 2 percentage points of interest rate hikes this year, which will obviously take a bite out of consumer purchasing power and wage purchasing power. And if I didn't see a Fed becoming much more hawkish, both on monetary and fiscal policy. And so I think you're exactly right, Mike, to point those things out as possible cushions. But in the face of some of those other characteristics, which are also unique, I think that they'll be offset.
But wouldn't bond yields be lower then? They're instead moving up, and in fact had a pretty bad week. We saw the opposite happen. Yields shot up on the 10-year. If recession was really getting priced in, wouldn't it look different?
So the direction of yields is important. And, of course, like you said, we expected with the flight to safety for those yields to come in a little bit. And it's been ebbing and flowing and rocking back and forth. But it's actually the trajectory of the curve that is more important to me at this juncture, right? Because banks borrow at the short end to loan at the long end. And when the curve is flat, they are disincentivized to doing that. And so if I'm worried about a recession, if I'm worried about GDP growth, which I think we all saw, Goldman came in and took its estimate way down today and said there's even further downside risk. We're worried about that yield curve and banks pulling in their liquidity to help spur and offset some of those recessionary pressures.
All right, well, tech is one of the worst performing sectors this week, down more than 3%. But Deutsche Bank says investors should be bullish on some big tech names. The firm initiating coverage of a number of internet stocks with favorable ratings and picking Chewy, Amazon, Uber, Meta, Match, and Expedia as its top picks in the group. Deutsche also says investors have a prime opportunity to build positions in secular winners amid the recent tech-led sell-off. The firm wasn't as bullish on other names, initiating Etsy, Spotify, and Twitter as holds. Those stocks actually are all sinking today. Greg, I guess in theory, not the worst time to start covering, the FANG-type group, the internet names, after this trouncing that they've gotten. Is this an area that you think is worth, shopping among?
I do, actually, and we've been keeping a strong eye out for it. Look, in an environment where I believe that we'll see multiple compression, it's really hard to get expansion in a rising rate, possibly recessionary environment. You'll get performance where there is strong, protected, secular earnings growth. That's where you'll get performance. That's where you should look for safety. And so, as you guys know, I've been talking for months about finding safety in some of these high free cash flow generating, category killing, structural tech plays. And I think, although philosophically I agree for the most part with what the analyst said and did, I make a simple distinction that I didn't see in that piece, which is there is some tech that is actually structural, whereas there's some tech that is more fashionable or in style. And so when you think about the companies that are building the cloud, whether it's the Amazon Web Services or whether it's the NVIDIAs of the world who are putting those chips into the data centers, when you think about the companies that have created the digital advertising capacity, when you think about the companies creating the enterprise software platforms that businesses will run on, that stuff's structural. Those secular tailwinds are demonstrated. They continue to put up 30, 40% top-line growth. They continue to give us margin expansion. They have demonstrated pricing power and demonstrated protection from some of these macro factors. That's a far cry from tech that might be more stylish, more fashionable, that is not structural. And there's two categories of that. Those applications that run on that structure, like a Booking or something like that. And then there's things that, like a Snap or a Peloton, that I might make the argument doesn't really have a moat. Might be more fashionable rather than structural.